Today on the Daily Dollar, we're following up my last video where we discussed why crypto will survive. This is the depressing twin of that video as we discuss why crypto will fail. The first thing I want to do is define what failing actually means in this situation. Crypto can be broken down into two components. Blockchain technology that can be used and modified for any process you want to ensure the data is accurate and has not been tampered with or modified. This technology is not going anywhere and will be developed for governments, companies, open platforms, and anyone who needs a nearly incorruptible record system. The second is cryptocurrency, with its ability to function as a decentralized financial system and marketplace. This is the part we will be discussing in this video. Now, failure doesn't mean cryptocurrency goes extinct. That Pandora's box has already been opened and won't be going back in. Unlike those 3D TVs that did actually go extinct, cryptocurrency will continue to exist in some shape or form, even if that means it will only be used for criminal activity, tax avoidance, or to fund North Korea's nuclear program. Failure in this case means it will not succeed as a useful means of exchange or compete with traditional finance and markets in any meaningful way. So if 30 years from now crypto is used for 2% of transactions, that will be considered a failure. Or if crypto is never used for anything besides speculative value, that will be considered a failure as well. I thought it would be better to clarify that now, as cryptocurrency and blockchain technology are likely here to stay, but whether they will live up to the lofty goals they mean to achieve is another question. Just as the last video, I will not be going over the technology here, only the obstacles and barriers it has to overcome. So with that out of the way, let's dive into the reasons crypto may fail. Number 1. Trust and accountability. But what? Crypto is supposed to be trustless. What do you need trust for? And to you, smart citizen, what happens when it doesn't work properly? So expecting any system to work 100% of the time is kind of absurd and not really possible. And one of the systems that people really don't want failing is transferring or holding their money. Which comes to the big issue of when a bank messes up and accidentally moves money out of your bank account, you can sue the bank and have them put their own money back in. On a blockchain, you cannot do that. And keep in mind, I am assuming that one, transaction speeds increase from how they are today, and secondly, the major outages that Solana goes through stop happening or don't have to happen with high speed. If the only way cryptocurrency can scale to high speeds involves so much volatility and uncertainty, then the system will never be able to be relied on for the most part. Because if the Trinity dilemma is truly an obstacle for blockchain technology, then it may never be able to overtake the traditional system. After all, the Trinity issue with blockchain technology is like this. There are 3 pieces: speed, security, and decentralization. If a crypto project can't actually achieve all 3, then that'll be a major roadblock for the industry. So imagine if it's secure and fast, but it's centralized. Well, that's basically the financial system we have now. If it's secure and decentralized, then it's most likely pretty slow and wouldn't be able to handle the volume of traffic. And lastly, if it's scalable and decentralized, but not secure, then the error rate will be too high for people to risk their money transferring it through. I've noticed crypto bros tend to ignore this part, but if the Trinity dilemma can't be overcome, and all 3 cannot be achieved, then it will be very difficult for cryptocurrency and blockchain technology to compete with traditional finance. Because for a cryptocurrency to have that accountability, it needs to work nearly 100% of the time. It needs to be able to process it as soon as the person requests, because this is their money at risk, or in which case they are waiting to buy something. And if it's not decentralized, then there would be no point of traditional people switching. And then crypto bros will be like, but inflation is killing your money. And to that I say, yeah, so does Bitcoin dropping 90%. If one day bread cost 1 Bitcoin, and then 3 months later it costs 10 Bitcoin, that is literally 10 times more expensive. That makes our current 10% inflation look like a joke. And that is a good segue to the second reason I think crypto will fail. The comparison to gold. Or to be more precise, that through artificial scarcity, crypto can maintain its price and fight off inflation. Which I have always found to be a weird argument, because not many people actually like investing in gold. And the main reason for that, it is both volatile and traditionally worse than just investing in companies. And I will state the exception is usually people who are fleeing countries and need to swap everything they have into gold. That way they can pay people along the way to get to wherever they're going. But if you're gonna tell by the example, that is a pretty niche market, as well as a pretty desperate crowd that probably didn't have that many resources to begin with. That being said, smartphones and internet connectivity are more abundant than they have ever been. Along with the ability to make transactions in a decentralized manner, crypto might actually be able to carve that niche out. And then you have the scarcity will make it go up forever. And that is not true. If you've ever looked at a gold price index, that is very not true. In that way, gold is kind of like a Ponzi scheme actually. Gold is a very valuable metal. It can be used for a lot of things. That being said, it is so expensive, nobody wants to use it for anything. So the only way gold would actually ever go up forever is if a crucial technology to human civilization only could be made with gold, and there was zero alternatives. AKA, it means demand has to be there continuously. Because at the heart of the gold debate for cryptocurrency is that because supply is constrained, demand will always push the price up. However, there is a huge flawed issue with that assumption, that demand will always be at least continuous, or in the long term at least continually be growing. However, the one thing gold can do is gold can't be replaced. As in, it's just one of those elements on the periodic table. We can't create new elements, but new cryptocurrencies can be made. And to all the physicist and particle collider people, yes, I know technically we can make new elements. But what I'm trying to say is that what happens if a new cryptocurrency replaces the other one? Imagine you put all your money into Bitcoin, and then somebody makes BitDollar, which is the same thing as Bitcoin except for maybe it has a faster transaction speed. Now because it's more useful than Bitcoin, all the demand for Bitcoin starts leaving and going to the new coin. Which means if you bought Bitcoin, at the time it was reaching peak demand, you will lose almost all of your money if you hold on. Because as the new Bitcoin is better than old Bitcoin in every way, there would be no reason for people to go back to the old one. Because scarcity does not automatically mean valuable. Or let's imagine Bitcoin does become the standard bearer of the world. Everyone buys in that Bitcoin is the harbinger against inflation. Eventually, every dollar that is available to go into Bitcoin will be reached. It will hit market saturation. There's no new money left in the world that can be invested in Bitcoin, which means essentially Bitcoin's price will remain flat at saturation point. There will be no new buyers because there's nobody left that doesn't own some. And once Bitcoin no longer goes up, people would then transfer their money into something that does give a return. This is why gold was replaced with things like stocks and bonds and government treasuries. Once the maximum saturation of demand has been reached, the returns become minute. And then let's say government bonds and companies are giving a better yield than Bitcoin is. Well, then the demand in Bitcoin leaves to those other assets, which means Bitcoin would start dropping, which would mean those same assets become more valuable because they are providing a yield and a return, while Bitcoin is actually losing value, which makes more money leave the system. And you can see where this is going. So if you assume that there will always be a continuous increase in demand over time, you are speculating there will always be a buyer coming in behind you, which is basically a pyramid scheme, unless it actually has a use. And my third and final reason of why crypto may fail is no other than what cryptocurrency was trying to avoid to begin with, which is government laws, regulations, and taxes. And this one is pretty straightforward, as in if countries make it illegal, it is really hard to use. And I don't mean technically hard. I mean, it's not worth going to jail for. And then crypto bros be like, but you can't stop the revolution. Clearly you don't live in Russia. Because in certain countries where people actually want to keep most of their money out of the currency of their nation, is usually under a dictatorship or a very authoritarian government. AKA the ones that are the most likely to put you in jail, kidnap your family, or just execute you. And if you're in a functioning democracy, then most likely your currency is relatively stable. At least stable to the point where there's no point in switching out of bonds, treasuries, and stocks. Because as a reminder, a 10% increase in prices is still better than a 90% drop in Dogecoin. Which means the biggest market for cryptocurrencies would be dysfunctional democracies. So America, for example, is too functioning for it. China is too controlling for it. Which leaves you a few countries like Argentina or Greece. The other issue is regulations and taxes. For example, if you still have to pay your taxes in US dollars, you will always have to sell your cryptocurrency. And if your country doesn't allow the recognition of it as a currency, then there will be no daily use case for it. You will not be able to buy bread for it. You will not be able to buy a house for it. And if the government does back it or allow it, then it will most likely control it. And the last issue that is largely up to governments to allow is how people get paid. Most people's money comes from their job, and most people will be paid in the currency of the nation they live in, which means the primary currency they will have on a daily basis will be the currency of that nation, which means if they use cryptocurrency, they will have to take their paycheck, exchange it for crypto, exchange it back to money to then actually be able to use in their country. Do you see the unnecessary middle step here? Or is it just me? And those to me are the primary reasons crypto could fail. Am I being too hard on the crypto industry? Did I overlook something? Let me know in the comments below. And if you like the content we make, be sure to hit that like button, subscribe to the channel, and keep watching The Daily Dollar.